How billionaires use loopholes to avoid taxes. What they don't want you to know. Imagine living in a world where billionaires can buy private islands, luxury jets and super yachts, but pay less in taxes than you do on your modest salary. Sounds unfair. That's because it is. Today we're exposing how the ultra-rich legally dodge taxes, the loopholes they exploit, and how this affects you. Hello guys, welcome to our channel. If you've ever wondered why billionaires seem to play by a different set of rules, you're in the right place. In this video, we'll break down the sneaky yet perfectly legal strategies billionaires use to avoid taxes and reveal how these tactics tip the scales against the average person. Before we dive in, make sure to hit that like button, subscribe, and turn on notifications. Let's uncover the truth together. To understand how billionaires avoid taxes, we first need to look at the tax system itself. Most countries, including the US, have a progressive tax system, meaning the more you earn, the more you're supposed to pay. But the system has a fatal flaw: loopholes. These are legal gaps in tax laws that allow billionaires to slash their tax bills to a fraction of what's expected. Why does this matter? Because every dollar they avoid paying is a dollar the government can't use for schools, hospitals, or infrastructure. And guess who ends up covering the shortfall? That's right, people like you and me. But how do they get away with it? Let's expose the playbook of the ultra-rich. Exposing the loopholes. 1. The offshore game. When you hear the term offshore accounts, you might picture secretive bank vaults in faraway lands, but the reality is even more elaborate. Billionaires often utilize sophisticated networks of shell companies and trusts in tax havens, such as the Cayman Islands, Bermuda, and Panama. These jurisdictions offer low or even zero tax rates on profits, making them a haven for wealth. Here's how it works. Instead of reporting profits in their home country, where taxes are higher, they create shell companies in these offshore locations and shift their earnings there. The shell companies don't produce or sell anything. They exist solely to funnel profits. For example, a tech company might move its intellectual property, like patents or trademarks, to an offshore subsidiary. That subsidiary then charges the parent company for using these assets, essentially transferring profits to the low-tax jurisdiction. Major corporations like Apple, Google, and Amazon have been accused of using these methods to save billions in taxes. While these companies often argue they're following the law, the result is staggering. Governments lose out on billions in revenue every year. Impact on you: this offshore shuffle widens the wealth gap. Governments compensate for the lost revenue by raising taxes on middle and working-class citizens or cutting funding for critical public services like schools, healthcare, and infrastructure. Meanwhile, the wealthy continue to grow richer, shielded by a system designed to protect their wealth. 2. The real estate shuffle. Real estate is one of the most versatile tools in a billionaire's tax avoidance arsenal. One of the most powerful loopholes they exploit is the like-kind exchange, which allows property owners to defer capital gains taxes by reinvesting the proceeds of a sale into a similar type of property. Here's what this means in practice. A billionaire can sell a commercial building for a hefty profit, immediately reinvest the proceeds into another property, and avoid paying taxes on the sale. This process can be repeated indefinitely, allowing them to build an empire of assets while never paying their fair share of taxes on the profits. For example, real estate moguls like Donald Trump and Jared Kushner have been known to use like-kind exchanges to grow their portfolios while paying minimal taxes. The wealth generated from appreciation in property values is effectively tax-free until the billionaire decides to sell the final property and not reinvest, a decision that might never happen. Impact on you. This loophole disproportionately benefits the wealthy, as everyday homeowners don't have access to such tax-deferred opportunities. It also affects local economies. Cities and towns lose out on significant tax revenue from these deferred transactions, forcing local governments to increase taxes or reduce public services for ordinary residents. 3. The charity conundrum. Charitable donations are often seen as a noble act of giving back, but for billionaires, they serve a dual purpose, boosting their public image while slashing their tax bills. Here's how it works. When billionaires donate stock or other assets to a charity, often their own foundation, they can deduct the full market value of the donation from their taxable income. But here's the catch: many retain control over how those assets are used. Their foundations may allocate only a small fraction of the funds to charitable work, while the rest remains in investments controlled by the billionaire or their close associates. Take the example of billionaires like Jeff Bezos or Mark Zuckerberg. Their massive donations often make headlines, but what isn't widely reported is the financial benefit they reap. By donating stocks instead of cash, they not only avoid paying capital gains taxes on the appreciated value of the stock, but also claim a substantial deduction. It's a win-win for them, and a lose-lose for taxpayers. Impact on you. While you're struggling to deduct a few $100s in charitable contributions, billionaires are using these tactics to drastically reduce their taxable income. Meanwhile, the government misses out on potential tax revenue that could have been used to fund public projects, leaving the burden to the average taxpayer. 4. Borrow. Don't sell. One of the most brilliant and infuriating strategies billionaires use to avoid taxes is the borrow, don't sell approach. Instead of selling assets like stocks or real estate to access cash, which would trigger taxable capital gains, they take out loans against their assets. Banks are more than happy to lend to billionaires because their assets serve as collateral. And with wealth in the billions, there's little risk of default. Here's how it works. Imagine a billionaire holds $1 billion in stock. Instead of selling $100 million worth of shares to buy a yacht, they secure a loan for $100 million using the stock as collateral. The interest rate on such loans is often incredibly low, sometimes as little as 1 to 2%, and the billionaire doesn't pay taxes because loans aren't considered income. As long as they don't sell their assets, their wealth continues to grow, untaxed. Elon Musk, for example, has publicly acknowledged using this strategy, taking loans against his Tesla stock to fund his lifestyle. This technique allows billionaires to live luxuriously while paying almost nothing in taxes. Impact on you. While the average person pays taxes on every paycheck, billionaires can access vast sums of money without ever triggering a taxable event. The system essentially rewards wealth over work, leaving ordinary taxpayers to pick up the slack. 5. The capital gains advantage. One of the most glaring examples of inequality in the tax system is the difference between how wages and investments are taxed. For billionaires, most of their income doesn't come from a salary. It comes from investments like stocks, real estate, or business profits. These are taxed as capital gains, which have a much lower tax rate than regular income. For instance, in the US, the top tax rate for wages is 37%, while the top rate for long-term capital gains is just 20%. This means that a billionaire making $10 million in investment income pays a lower tax rate than a teacher earning $50,000 a year. Warren Buffett famously highlighted this issue when he revealed that his secretary paid a higher tax rate than he did. And here's the kicker. Thanks to other loopholes, billionaires can often reduce their effective tax rate on capital gains even further. Impact on you. This disparity creates a system where the rich get richer and everyone else is left behind. As billionaires accumulate more wealth at lower tax rates, the gap between the ultra-rich and the middle class continues to grow. The lost tax revenue also means fewer resources for public goods and services, which are essential for everyday people. What can be done? These loopholes aren't just unethical, they're unfair. While the average person works hard and pays their fair share, the ultra-rich use their wealth to rewrite the rules in their favor. So what can we do? First, demand transparency. Push for policies that close loopholes and hold billionaires accountable. Second, educate yourself. Knowledge is power, and the more we understand the system, the harder it becomes for the rich to hide in plain sight. Finally, stay informed. Subscribe to channels like this one to keep learning about the systems that shape our lives. If this video opened your eyes, hit that like button and share it with a friend. Don't forget to subscribe for more deep dives into the issues that matter most. Together, we can expose the truth and demand a fairer system for everyone. Thanks for watching, and we'll see you in the next video.